So when firms look to explore their options as part of joining a larger group, as with others, we can offer a capital event to de-risk for those individuals. Rather than value a business as a multiple of profits, which is very usual in the industry, we value your business as a multiple of turnover. And the reason for that is because we are acquiring our right to a percentage of that turnover as our return on investment. The key thing is when you sell your business to anyone else, you are selling earnings and you're crystallizing that value today. The difference between us and the traditional consolidator is you would move on to a fixed ceiling salary model with that consolidator, whereas in our environment, partners retain equity in the practice and retain rights to the profits. So one of the key principles of our model is local autonomy. We think the independent model has a lot of benefits to it. The ability for partners to be able to manage their portfolios and their colleagues as they see fit based on the requirements of their clients and the local communities that they service. We think it's a bit of a nonsense having a one-size-fits-all approach regarding how you choose to service clients and the services you choose to provide them and how they get delivered. So it's really important for us that our partners' autonomy is respected. Ultimately, they've been doing this job for a number of years. Why should they be told how to do things differently now? In return for our charge of turnover, we provide central practice management infrastructure, which you no longer need to fund locally. All else being equal, what you're left with to manage is your portfolio, your staff, and where you choose to operate out of. Everything else that's needed to operate a business, be that insurance, HR and recruitment, marketing, IT systems and support, financial reporting, all those considerations are taken away from you and you receive the benefit of those cost savings in your local P&L. Whilst earnings suppression does occur at the point of you realising your capital event, the key is we work with you to grow those earnings back to where they were pre-merger in as quick a timescale as you'd like. A range of initiatives that we offer our firms to do so are funding for acquisitions, provision of outsourcing or offshoring solutions to drive margin capacity, provision of robotics and AI solutions for high volume, low risk manual entry tasks, and access to additional services that you can cross-sell into your clients. Through a combination of those initiatives, we've seen our partner earnings grow back to where they were pre-merger within 2 to 3 years, and partners on average in our environment are earning nearly twice what their counterparts are earning in the traditional consolidator. What we represent is very much an opportunity to de-risk, but without compromising that ongoing local autonomy or earnings capacity. If you'd like to hear more about TC Group, please do reach out. I'd be really keen to hear more from you and your business. Our partners are advocates for our business because fundamentally we built this with them in mind and their colleagues in mind. So by all means, please do reach out to any of our partners in your network as well.